Okay, welcome back to TackleTrading.com. This is Coach T, Tim Justice with Tackle Trading, here to do the Commodities Report for our weekend here, end of May. Good to have everybody. All right, let's jump right into it. Let's start with crude oil. And actually, like we should do every week, every discussion on commodities has to start with the U.S. dollar and the value of the currency right now. So much of the commodities market is driven by currency markets. Dollar's been rallying. This last week, it had a big day on Monday, flat most of the week. But the presumption out there is with the Federal Reserve and where we are from an economic standpoint that the dollar's seeing some strength from that. They're not expected to raise interest rates till later in the fall, which has put the dollar in some strength. Also, the situation in Greece is making some of the European currencies, especially the euro, which is the second world reserve currency, it's giving that some weakness. So euro weak, dollar strong. That's why we've had the dollar rally. Now, here's a couple of things to keep in mind. Number one, if the euro and the Greece situation settle out, okay, if Greece comes to some kind of terms or some kind of an agreement or some kind of an ability to pay back the IMF here coming up early in June, or they strike a deal there, well, that's going to make the euro look better. The euro will rally, the dollar should sell again. I don't think the volatility in the dollar is gone. In fact, I think the currency markets are here to stay, and every one of you should learn how to read them. Let's jump into the individual stuff. We always start with crude oil. Really interesting week in crude oil. Bring up CL contract range bound, guys. I mean, it's what it's been. Let's go over the commodities report data. We'll get this maxed out. So I keep track of some notes for myself as well as you guys just to kind of see what we're looking at. Okay, here we are on the weekend, last day of May, 59.94, about the same price as when we did it last weekend. I moved it to a neutral call. The range bound activity that I talked about weeks ago, the trend line violation, the 523 last week. We talked about massive global oversupply. We took away the bullish call a little bit. We moved it to slightly bullish. Now I'm moving it squarely into neutral. Wall Street money still going into oil. Many 2014 rigs are storage yards now, just holding oil. There's still 9.6 million barrels a day, the highest since 1970, being produced. Oversupply right now, those are the concerns. The rally in oil was because of a weak dollar. If the dollar goes down again, oil will go back up. It does hold an impressive trend, neutral trend right now in relation to the fact that the dollar has rallied so much. You would have expected a lot more selling from the oil contract. We did not get that. Now, what you're seeing here is a range, and the range I have on this one, 56, I'm moving support down to 62.5. We're seeing expanding volatility on some days. It's that big debate, the nature of the supply market, or is the dollar going to move it? If the dollar drops, I believe oil would break out and run. So keep an eye close on those two things and their relationship. Okay, let's move on to the next one. Natural gas. Okay, nat gas. Okay, stay right here with the data. 2.60. I had it at a neutral call last week. We've moved the support point down to 2.44 right here. And resistance is still at 3.1. Expanding volatility on range-bound activity. Inventories were up 112 billion cubic feet Thursday, which is 13% more than expected. That's why you saw the price put some pressure in. I'm still giving it a neutral call for a couple reasons. Number one, if I back this chart out, I see a massive downtrend November, December, January, February, been relatively neutral most of 2015, most of 2015. We had the big rally early in May, then the big sell-off. It looks like it's heading back towards the lows. I do most of my commodities report calls as a position trader or, a little bit longer term than, say, a swing trade. So we're watching these major trends developing, and I still see range-bound activity long term. Okay, it looked like it could have broke out. It looked like it was holding strong. Looked like it was going to run. Didn't do it. Failed. Came back. Now we're stuck in the range again. All right, the gold contract, 1193 right now. I still have it at neutral. Same support and resistance ranges between 1175 and 1240. Economic growth is stagnant right now, and that's what we're seeing from data from the government. GDP data, inflation data, production data, you name it. Not only in the U.S. but globally. And because economic growth is not there, it's leaving traders believing that you're not going to see a rate hike from the FOMC. And that's where gold is kind of getting stuck. You're getting different opinions on both sides. Let's look at the chart on gold. Okay. Same range-bound activity. In fact, those ranges are still right there. You know, support, resistance, hanging out in a range. In fact, we'd probably even move that down to right there. You know, just bouncing back and forth, up and down, until you get clear direction from the Fed. I don't know if gold is going to make that big trend that people are looking for. Okay. All right, silver. I've been relatively more bullish on silver. I've been talking about that for a very long time because of the GSR, the gold-silver ratio. I think there's relative strength there because of their industrial uses and what the actual precious metal is used for. Price right now is 16.7. 0 to 1 is my call right now. 16.27 and 18.50. Okay, kind of right in that range. Let's go look at this. Silver, and actually that saw a typo. That should say 16.25. Let's correct that real quick. Okay, silver here. Boom. Right, let's take a look at it. You know, you got a higher high, higher low. Higher high, higher low. Developing uptrend, okay, good pullback, sell off with the overall precious metal market when the dollar rallied on Monday, flat through the week. I think there could be a trigger opportunity for a directional trade on this if you get some strength on Monday or Tuesday. A lot of it's going to come back to the dollar. Keep an eye on silver if you want to trade the ETF because you don't trade futures contracts. You know, we look at the futures. We want to get right to the data. Even if you don't trade the futures contract, I think it's good to get a list of the futures contracts so that you can get right to the data. SLV is a good ETF. I gave you an ETF list a few weeks back, and it's in the post in Tackle Trading, the list of the ETFs that track these things. SLV would be an interesting one to look at. You know, consider strategies like naked puts or covered calls, something semi-bullish, semi-directional. You could just play a bull call spread as well if you know how to do that kind of stuff. But interesting, would need a trigger, would need confirmation, but it's setting up, in my opinion. Okay, it's setting up. All right, let's take a look next. Copper. You know, bad month for copper. Down 5.5% in May. The U.S. and China had weak data. Now, China is the #1 global user of copper. I talked about that all the time because of, you know, they're building so much. They're doing so much in industrial production and building houses and that kind of stuff. Now, like Matt will tell you, a lot of it is fake. They're fake cities, but they are using copper to do that. Well, China hasn't had great data lately, and neither is the U.S. And the U.S. is #2 in copper use, copper demand globally. Price right now, 2.72. I'm still 0 to +1. I think China has a chance to rebound here at some point. Interested to watch that. Same ranges. Let's go look at the chart. Okay, HG. Now, one thing, do a little teaching right now. One thing traders watch is they watch the distance on the pullback. Okay, you see how those two boxes are about the same size? In fact, the first one might even be deeper from top to bottom on the pullback. As this trend is slowly developing, this range is pulling back, this would be a natural spot for this trend. Let's take a look at this here to maybe find itself. And bounce. Now, some people would tell you, well, support was here at 275, Tim. We had a bear candle on Friday. Be careful here, of course. Yeah, you're getting mostly bearish candlesticks. And for the month of May, biggest down or sell-off for copper in a long time. So be very cautious from this standpoint. But I think there is a potential opportunity here from a pullback standpoint. Keep an eye on it. Trigger would be above probably the candles here at 280 or so. 279.5, yeah, somewhere in there. All right, next, let's look at Palladium. Price 776, 0 to 1 is my call. I've been fairly bullish on Palladium for a long time. I like the underlying commodity. Hasn't performed great since we started. I mean, moved up to about 780 or so, up 20 points from the original commodity report. Now we're still up 15 points from that. But not a huge run here, you know, with the dollar volatility. It's kind of kept some of these commodities in the dust. 770 to 805. And just range bound is why I call it. Now let's go take a look at the technicals on Palladium. PALL is the ETF if you're interested in that. Okay, and you can see it. You know, it dropped in March, rallied, started to pick up. Now prices are getting stuck in the mud here. Okay, we'll draw that line. In fact, I'm going to get my box. I like those rectangles. Pretty good range here to here. You know, you're moving into a consolidation on Palladium. Next will be Platinum. 1111, 0 to -1. I'm going bearish slightly on this one. 1086 to 1180. You know, support broke on weak candlesticks is what I said here. Let's take a look at Platinum. You see the breakdown. You know, generally when you break support, the next support is going to be what you test. So here we are at 1111. That would put us down at 1090 or so, 21 points down to the lower end of that range. Real bearishness on these candles. Red candle, red candle, red candle as it's dropping. So keep an eye on that 0 to -1 on Platinum right now. Live cattle. Okay, 152.50. Prices have been stuck around that location for a bit. 0 to +1. I moved to a bullish call here earlier in May. You know, as the cattle prices jumped. Key support at or resistance at 155 held, slowing momentum until a trigger. Let's go look at the technicals on LE. This right here, we talk about this when we get into the livestock prices all the time. Sometimes you got to put in the M5 or the N5 or whatever contract it is. If you don't know what that is, by the way, you can look it up. Come over here where it says futures all, do like 3 months, okay? And look at LEM5. So that's those third and fourth digits, the M and the 5, is what distinguishes the June contract. So when I go to the June contract, it smooths out the candlesticks, and you'll see developing uptrend, head and shoulders, key resistance in here. You know, we need a break. We need a break at 155, confirmation. The trend is still there. You know, that ascending wedge, ascending triangle, whatever you want to call it, is still there. But we haven't seen confirmation yet, so keep an eye on that. Let's go to lean hogs. 0 to +1 as well. You know, livestock I'm interested in. If you're, you know, looking at that, there's an ETF on that Commodities Report data. You got to go to Scouting Reports and then go to Commodities Report and look at the list and write it down. Okay, 531 is our date, 83.97, 0 to +1, 79 to 85. The higher low was confirmed. There's relative strength and a key trigger at 85, that resistance, which has been in play now for over a month. Let's go take a look at that. Okay, here we are, right here, guys. You'll see that key resistance, higher high, higher low, pressing resistance, about to break out and run. It would be a real good trigger for this pattern. Keep an eye on lean hog prices based on those levels. Okay, let's go to corn, get into the agriculture stuff, which I'm fascinated by lately. 351 price, given into -1 call. For a long time we've been bearish. Now look at these numbers. Okay, we started calling this bearish back on the 23rd of April. Down 9 points, down 6 points, down 4 points, up 7 points, down 8 points, down 9 points. Corn prices have been down, down, down most of the month of April and May, and we've been calling that 0 to 1, 0 to -1, 0 to -1, -1. We've been in the bearish camp. This is how I rank my market posture. The more you watch these commodities reports, you'll understand exactly what I'm talking about with this. Support here, 318, 370 is resistance, and a further breakdown is confirming. Let's look at the ZC contract. Yeah, you can just see the bearishness here, guys. Okay, back that up. You can see the trend developing. Okay, you can see those levels breaking down. Broke support and dropped. Broke support. Here we are. You know, still bearish. Giving it a bearish call. -1. You know, oats. ZO. 531 the date, 234 is the price, -1, 225 to 255 is the range. It's been in that range for a while now, but I do think the bear retracement is setting up a potential opportunity to enter on oats. Let's take a look there. ZO. Downtrend. Bear rally, hit the trend line, hit the old support line, confirmed, triggered. Here we go. It's on the downside. That is a classic downtrend right there. When you see a classic downtrend, that's why you see all these -1, -1, -1, -1, -1, -1, -1. Don't make it complicated. You have to trade what you see. When we look at that chart, it is bearish. When we look at that pattern, it is bearish. When it rallies back up into old support, that's a bearish retracement. Those are what we look for potential entry points. Okay. All right, couple more here. Soybeans, wheat, and sugar. Let's go to soybeans next. Giving this a -1 call. Same call last week. Price right now $9.34. Bear retracement developing on these agricultural products. Let's go take a look at ZS. You can see a few green candles here popping up at the end of the week. Broke support. Okay. Down, 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 down. Big down day on Monday. Tuesday hit a bottom. Wednesday, Thursday, Friday coming back up. Old support 945 or so could play in as new resistance. So that's the same kind of thing we were talking about a minute ago. Technical analysis 101. Let's go to wheat. Giving it a neutral call. Poor wheat. It's the one ag product I was interested in becoming bullish on. I like the head and shoulders pattern. It was popping in. We talked about it for a while. Can't call it anything. Got to call it neutral. You know, American farmers produced 2.909 billion bushels of wheat. It was up 3% from a year earlier. A lot of the reports I read this week, they talk about how there's just lots of wheat this year and supplies are up. And basically supplies are up because weather has improved. We've had a lot of rain in the Midwest, different areas. I know there's a drought in California, but a lot of the wheat producing areas have had good weather. Okay, so supply expectations are up. Now let's go take a look at ZW. Back this out. Yeah, looks like it's just kind of casually even down almost with that confirmation this week. It was a pretty bad week for wheat. It dropped, coming back in to test support. Keep an eye on that. All right, next, last but not least is sugar beets. Not sugar beets, sugar. SB made me think sugar beets. All right. 1201, 0 to -1, 1183 to 13.6 is the range. It did break down below support. We were slightly bearish on this last week. Let's do SB. You can see the downtrend. You can see the breakdown. You can see why I called it slightly bearish here. Broke, sell, hitting the low, but still you gotta respect the overall trend. Okay, this has been the Commodities Report presented by TackleTrading.com, where every week we go through the major commodities that I'm interested in. If you want to add anything to the Commodities Report, just buzz me an email or put it in the clubhouse, and I'd be happy to chat with you. Love the activity over there lately, by the way, guys. I think you guys are doing great. Appreciate the feedback, and always, feel free to post us a question. That's why we created Tackle Trading, is to have a team here. So this has been Coach T from TackleTrading.com. Get in the game.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.